Lululemon is down 42.45% year to date. And I believe this is the deal of the century. Welcome back to Strongman Personal Finance. Lululemon is a very popular brand with women that love to go to the gym. But there's actually somebody else that's starting to appreciate Lululemon. That's men. That's right. This company has sold off massively, and people are freaking out, and they're calling for the end of Lulu. And I'm here to dispel the myth that this company is going anywhere. And when you see a company drop 42% in, 6-7 months, and it's got such powerful brand power, it's probably a good deal. But I'm going to prove it to you. So let's go ahead and look at some of the basic financials. We're going to look at the overview. We're going to do some comparative analysis. And then we're going to look at their most recent quarterly report. And I'm going to show you some very encouraging things on top of their financial statements. So first of all, Lululemon has a market cap of $35 billion with trailing revenue of $9.83 billion and trailing net income of $1.58 billion. They have a PE ratio of 23 for a pretty rapidly growing brand and a forward PE of 20. I love seeing the forward PE smaller than the PE ratio. Dividend, not applicable. That's actually tax efficient. We have analyst price targets. Look at that. Analysts are saying Lululemon's price target is $437, which is 50% upside, and I agree with that wholeheartedly. Why is Lululemon going down? Well, there's fears about sales growth in North America. But I don't know if you guys knew this, there's actually more places around the world than just North America. So let's go ahead and look at the financials. Now keep in mind, this stock has a 20-something PE. Look at the quarterly revenue growth from 2019. It's basically going up at a 35-degree angle, okay? I measured it earlier. That's pretty solid revenue growth. The most recent quarter, they had 10.4% year-over-year revenue growth. That's pretty solid revenue growth in a time when the consumer is stretched by inflation and interest rates are high. What do you think is going to happen when interest rates drop and people have more money in their pockets when they refinance all their debts? They're probably going to spend it at Lulu. And who shops at Lulu? Upper income women. Who's one of the highest earning demographics? Young women that don't have kids and aren't married. What are they going to buy? I don't know, but they're probably into fitness and they're probably going to buy a pretty powerful brand name. Let's go ahead and look at the gross margin. Gross margins are stable, so there's really not a lot of competition eating away at their margins. Operating margin is within the normal band. It's in the, low 20s. To almost high 20s, and a very solid profit margin in the most recent quarter of 14.55%. That's pretty good. We're going to look at the balance sheet in a bit on the actual financial report. Look at this growth in operating cash flow. This is powerful growth. What can operating cash flow do? Well, once you spend money on capital expenditures, you can go ahead and invest that money. You can invest that money in buying back shares. You can pay dividends. You can pay off debt, which Lululemon really doesn't have that much, except for mostly leases. That's insane operating cash flow, okay? Let's go ahead and look at changes in shares. So they've been buying back shares, and they've actually been accelerating share repurchases. It looks like this company isn't doomed. They got solid revenue growth, fantastic balance sheet, solid operating cash flow growth, and solid margins that are not declining. And this company actually has a bright future. So let's go ahead and look at the most recent financial report, the 10Q, which you want to look at. You can always find these by going to Investor Relations. Let's look at the financial statements. First, we're going to look at the balance sheet. This is a snapshot of the company's assets, liabilities, and equity at a point in time. What do we notice about their balance sheet? They have $1.9 billion of cash and $127 million of accounts receivable. That's almost $2 billion just of cash. Their current debts that are due within a year, are only $1.38 billion. They could pay off all of their current debts. Let's look at their long-term assets. They have about $1.5 billion in property, plant, and equipment. That's stores, etc. And they have $1.2 billion of right-of-use lease assets. Some of the buildings they use, they own, and some of the buildings they use, they lease. When you lease a building, you have to, and according to the rules of accounting, you have to record a right-of-use asset and a right-of-use liability, which you'll see on the liability side, because you're using an asset, the building that you're leasing, and you have future obligations related to using that building, which is the liability. Makes sense, right? But overall, if we look at their balance sheet, they basically own most of their buildings free and clear. That's pretty freaking crazy. They have $1.5 billion of property, plant, and equipment. Look at their long-term debt. It's basically non-current lease liabilities. This is lease expense that they're going to have to pay in the future. Okay, they lease buildings and they owe money on it, but they have solid cash flow. They can afford their leases. They don't have any really other long-term debt. Very solid, very powerful balance sheet. What else do we see here? Well, we see retained earnings is going up, which means there's profits. And we see common stock is going down, which is probably buybacks, okay? This is a very solid company. Now, we're going to look at the disaggregated revenue real quick. And this is where my bull case comes in for Lululemon. Look at the net revenue disaggregated by location. So first we have the Americas. If we compare the first quarter of 2023 to the first quarter of 2024, revenue has increased, just a little bit. Let's go ahead and do the math real quick. Revenue has increased 3.5% in the Americas. That's kind of tepid, okay? The overall revenue growth is 10% year over year. Where's that growth coming from? China mainland had revenue growth of 44%, and the rest of the world had revenue growth of 27%. The future growth of this company, while it's coming from the United States and from North America, from the Americas, a lot of it is going to come from international. There's a lot of places around the world where they have a rising middle class, okay? What are these upper middle class empowered women going to buy? They're going to buy Lululemon. That's right. So we can see that international revenues are massively expanding. That's good, okay? And U.S. revenues, while they've kind of like almost flatlined, this isn't just a U.S. company, okay? This is a global company. I don't see what the issue is. With a 20 PE for a solid brand like this, interesting, okay? We can look at the operating income. So a huge chunk of their operating profit, their profit before interest and taxes, comes from the Americas. But they're having pretty decent profits from China and from the rest of the world, okay? Pretty significant chunk of their profits come from China and the rest of the world. And that's going to grow as the revenues around the world grow. Let's go ahead and look at some additional information. Here's another bull case. What do we see here? Women's product growing. Men's product growing even faster. So women's products grew by almost 10%, right? Men's products grew by 15.3%. They're appealing to men. Isn't that crazy? Okay. Look at the growth in e-commerce. So e-commerce, which is, a little bit more profitable, is growing at 8.5%, where company-operated stores is growing at 11.6%. So company or operating stores are still generating pretty impressive revenue growth, but e-commerce is also doing so as well, okay? Overall, I'm pretty bullish on this company. Amazing balance sheet, solid revenue growth, global exposure, global diversification, and they're reaching out to men. And men's products are actually a pretty significant part of revenues. I believe this stock can easily 10x, not even joking, over the next 20 years. What are your thoughts? Leave a comment below. If you enjoyed my analysis, don't forget to subscribe to my channel and hit the like button. Also consider buying my book, Stop Being a Broke Loser. It's on Amazon. It's roughly $13. If you want a personalized video, you send me $50, see the pinned comment below, and I will make you a personalized video. I will not do stock predictions for you, but I will do financial statement analysis. If you want one-on-one tutoring with a certified public accountant, aka me, it's $75 an hour. See the pinned comment below. Have a wonderful night.